What's up guys, welcome back to Jeff of All Trades, and today I'm going to be talking about things to consider before making your first investment into the stock market. Some things that we're going to consider are what it means to own a share in the company, what affects the company's value, different trading strategies, and research tools. So let's dive right in, and we're going to be using Tesla as our test company today. So when we talk about buying stocks, that means that we're owning a very small portion of the company. However, as beginner investors,
we don't care.
Let me tell you
We don't care.
we don't really care about the ownership, we just care about the value that comes with buying the stock. When you purchase a company's stock, you're purchasing a small piece of the company called a share. Investors purchase a share in a company that they think will go up in value, which in turn increases the value of a share, and therefore it means that you can sell that share that you just bought for profit. There are many different things that can affect the value of a company, and this can include politics, news, the economy, the company's performance, and this in turn is going to affect the share price of a company due to supply and demand, because the more people that want the stock, it's going to drive the price up, and the more people that are going to try to sell off the stock, it's going to drive the price down. So we're going to be using Tesla as our example and looking at what factors can affect the share price in either a positive or a negative direction. So when looking at Tesla, if they're able to sell a lot of cars, this relates to the company's performance. It shows that they're in a strong position, and this can increase the share price. Another thing to look at is the economy. If a lot of people are moving, if the economy is moving towards electric vehicles, then this is also going to be good for Tesla, because this means that they'll probably be selling more cars. Also, if Elon tweets about Tesla, this can be seen as positive publicity, which will also increase the share price. Now, some things that can negatively impact the company, for instance, would be Elon tweeting that Tesla's share price is overpriced, or maybe like a Tesla vehicle blowing up and malfunctioning. These are all things that can negatively impact the share price of Tesla. Most of the news that we see today is already priced into the market, and what that means is that the market has already reacted to the news because it's already been out. However, unexpected news can have a drastic effect on the market. Now we're going to cover what are 3 different strategies that you can use when investing in the stock market, and those strategies include being a day trader, a swing trader, or a long-term trader. First, we're going to go over what being a day trader means. Being a day trader means that you're actively trading stocks every day. An example of a day trade would be buying a stock Monday morning and selling it Monday afternoon. Day trading is typically for people with more capital because they can make more profit on the small swings in share price throughout the day. Please keep in mind that in order to day trade more than 3 times in the same week, you'll need $25,000 in your account, or you'll be locked out for 90 trading days, and you won't be able to day trade again until a 90-day lockout is over. And this is a rule enforced by all stockbrokers to protect people from losing money day trading. So now we're going to talk about swing trading. So swing trading is different from day trading in the sense that you're buying a stock one day and you're waiting a couple days, or maybe the next day to sell. So an example of that would be buying a stock on Monday at $10 and waiting till Wednesday in hopes that it will change to $12, and you're selling for a $2 profit per share. Lastly, there's long-term trading, and this is the investment strategy that I typically use because studies have shown that most gains happen overnight. So if you're day trading and you empty your account at the end of the day, you're gonna miss out on potential gains overnight before the stock market opens again. Another reason that I'm investing long-term is because I invest with my savings account, and I choose stocks that I don't have to watch every single day. And some of these stocks also pay me dividends. So it's nice to see that consistent passive income growing in my account. A dividend is when a company pays out a portion of its profits to its shareholders. And typically the dividend is set per share. So the more shares that you have, the bigger your dividend payout will be. Now I'm going to share a couple tools that I use to help me find the right stocks and to calculate my potential dividend payout. So before you start thinking about searching any companies, think about companies that you're a regular consumer of. Think about companies that you purchase products from. You should be able to explain what the company does to make profit if you plan on investing in it. If you can't explain to somebody what you're invested in, then you probably shouldn't be investing in that company. And another thing is to think about what your investment profile looks like. Do you want to invest in small companies that have a lot of potential for growth but could also flop? Or do you want to invest in strong companies that have been around for a while and may not fluctuate as much in price, but they're going to provide you steady returns? These are just some things to keep in mind before you start your investing journey. So now I'm going to share a couple of resources that I like to use when researching stocks, and the first one is finviz.com. And as you can see on the homepage, you can check the performance of each index, and you can look at different signals And if you're more of a technical trader, they have different charts that you can see relating to different stocks. And I also like to check out the news. So they give you like a daily news update relating to different stocks and just the overall market and even political news. One of the best tools on Finviz is their stock screener, and you can use this to essentially put in your criteria that match your investment profile and find stocks that relate to that criteria. So for instance, we'll look at the S&P 500 as our index. We'll go ahead and put technology as our sector and semiconductors as our industry. And it'll bring up a list of stocks that match your criteria. And if you hover over the ticker symbol, you'll see the chart as well. And you can come over here, and another thing I like to look at is the PE ratio. So this is their price to earnings, and the higher the PE ratio is compared to other companies within the same industry, that means the company is typically overvalued, and the lower it is, that means that the company is undervalued. So it's essentially like a good investment. And you can also see the price and volume. Another feature I like to check out is the maps, and this breaks down companies in different sectors such as technology, semiconductors, communication services, and you can check their performance on here, just easily like highlighting a sector. And then I also like to check the futures. I also like to check out the Forex section to see what the value of the dollar is, because the stronger the value of the dollar is, the stronger the market's gonna be. And as you can see over here, crude oil prices are going up, and I'm investing in oil companies. So this also translates well for my investments. And this is also important because I can predict the general direction that my share prices are gonna go based on how crude oil is performing. Lastly, I'll usually check out the crypto tab to see how the cryptocurrencies are performing, because I actually have some investments in cryptocurrency. Finviz is really cool because it's essentially like a one-stop shop for everything. So this is by far my favorite resource to use when researching stocks. So now we're gonna come to NASDAQ.com, and I typically come to NASDAQ.com to look at dividend history for companies that I'm considering purchasing. And so we're gonna go ahead and use that Microsoft as our example. We'll scroll down and we'll go to dividend history. And as we can see, Microsoft typically pays an annual dividend of $2.24 per share. When considering dividends, companies typically pay dividends once a quarter, and some companies pay each month. As you can see here, Microsoft pays on the third month of each quarter. So they pay on March, June, September, and December every year. And these are the amounts that you'll get per share each quarter. So if I own one share of Microsoft, I get 56 cents for the quarter. So keep in mind that the more shares that you own, the higher your payout will be. And another thing to note is the ex-dividend date. So this is the last date that you'll need to own Microsoft before being eligible to receive a dividend. So if you plan on getting a dividend from Microsoft, you'll need to own this share by February 17th in order to get paid on March 11th. Honestly, you could buy the shares every quarter before the ex-dividend date and hold it through the payment date in order to get a dividend every quarter from different companies. I don't typically do that just because it's kind of a hassle, but to each its own. So yeah, that's why I use NASDAQ.com, typically just for searching up dividend history. I'm currently building a dividend portfolio right now where I'm trying to get paid each month. So as you can see, Microsoft pays on the last month of each quarter. Well, I choose different stocks that pay on maybe the first month or the second month of each quarter. Therefore, I can receive a dividend every month. And I believe I'm on track for that. I'm gonna really quick show you an example of a stock that pays every month. And it's called Realty Income Corporation. So we'll go ahead and look at the dividend history. And you'll notice here that they pay every month. So August, September, October, November, December. But they pay 23 cents per share each month. When comparing that to Microsoft though, they pay 14 cents more per quarter, and their share price is actually lower than Microsoft as well. So you can actually own more shares. So I think in order to own one share of Microsoft, I think it's trading right now for about like $230, and O is going for about $60 per share. Nasdaq.com and FinViz are just a couple of tools that I use to research stocks. You can find the entire list of my due diligence course, which is located in my Patreon, so make sure to follow me on Patreon. If you found this video helpful, please leave a like, subscribe, and turn on the bell to get notified every time I post. Best of luck trading, and stay safe.